Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, coming at you from the man, the myth, the legend, Cody Horn's patio. If you guys, by the way, don't know who Cody Horn is, go check out his YouTube channel. He talks a lot about some really great real estate stuff. Is also an amazing entrepreneur, living life on your own terms. He speaks it the right way, living a balanced life. So take a look at it. I'll throw a link down in the bottom so you can go see it. So, but that's the fun part about trading. You can travel and do different things, and that's why the microphone's not what it normally is, because I'm just using the onboard mic on the laptop, taking a look at some levels this morning before having the day with the family. So let's go ahead and take a look, see what we got coming up today. But I will tell you, it's a Friday, so remember the rules on Fridays. Fridays are not typically the greatest trading day. We had a live trading room yesterday, and not a whole lot really made any sense in yesterday's live trade room, and that was kind of our conversation. And we're looking at much the same today. So on the S&P, we are sitting right in a sideways kind of a trend, and that's the technical term for when the markets are telling you should probably go focus on your hobbies. Because on our 4-hour chart, we are sitting right above what was a decent little area of demand. And our demand area was really the gap fill zone. We came up to really this region of this 32.32 earlier in the week, pulled away from there. And so now on the 1-hour time period, we're sitting just above this gap fill area. Now I will tell you, the trade that I was looking for yesterday when we were in our live trade room, and when we did the live trade room yesterday morning, we were sitting right at about this time of day. It was actually 7 a.m. yesterday, and we were thinking, okay, if price comes into here, then you've got a decent trade on the rally back up. But because of the slowing of momentum, my thought was that we may see a little bit of a sell-off due to the slowing of momentum. So if I go to my 4-hour chart, we can clearly see that our momentum has slowed down. When we think about momentum slowing down, what we're specifically referring to is the fact that look at this big move up we had, and then followed by this pullback, and then this move up and followed by a slightly deeper pullback, right? And then this move up and then followed by a much deeper pullback. And so what we're seeing is that our moves up are getting smaller. Our moves up are getting a bit smaller, whereas our pullbacks, a couple of them have gotten a bit deeper. And so if I just throw, one of my favorite studies is the zigzag indicator, and I set the zigzag indicator to 0.5% retracement. And so every 0.5% it essentially will change direction. But it's a really clean and quick way to see trend, right? Because it just highlights where we are from a trend perspective. One of the unique things about the way Thinkorswim does it is they actually, they give it color: green when it's bullish, red when it's bearish. But notice that my moves, I'm starting to see a little bit of a slowdown in that position, and we've really gone. Yellow is essentially neutral. We've really gone sideways. So one of the things I would say is that a day like today, it's going to be a little bit more hairy of a trading day if you're trying to trade directionally inside of this market. It might make sense to look at, those of you that sell one-day options, credit spreads on the SPX. I know we looked at one on Wednesday in our live daily market commentary at this 3167 area. I think that's still a really good area to take a look at selling, see if you can get some credit inside of that range. I think that's a pretty decent zone to stay in between. But as far as directional trading opportunities today, when I look at my 1-hour chart, we came close to this gap fill level. We were unable to get in, and we based in front of it. So this, to me, tells me that I need to remove that zone. On a 15-minute scale, we do have a little bitty level right here, this little wick over wick area here formed right around market close on Tuesday, just before this big move up, where we could see a small reversal. So I think that could be good for a little 1-to-1, 2-to-1 trade. And if you really want to look for a small time frame breakdown, if we get basing right there at about 31.90, provided that we get the basing, you may get an intraday opportunity. Now, ultimately, I think our best trade is to wait for price to come up to this 32.32 area with a breakout opportunity and get long. on a good solid basing. I just don't know that that's going to happen over a weekend. All right, moving over to the NASDAQ. So in our NASDAQ, we've got this line of control. We've been talking about this area here. The market's been kind of chopping around here. We said yesterday if you wanted to take a quick short in this, you had an opportunity, and we did get a little move away from this NASDAQ short. So for those of you that were able to catch that trade, hopefully you close that out for a little bit of a profit, as that one wound up being a nice little 2-to-1 reward to risk. And we were talking about it as just a 2-to-1 opportunity. Looking at where we are today, we're up 0.94%. The S&P is up 0.43%, so the NASDAQ slightly outperforming the S&P today, which is actually a little bit different than what we've seen the rest of the week. For most of the week, the S&P was outperforming the NASDAQ. So the NASDAQ gaining a little bit more strength, a little bit more momentum, but there's nothing on here that I want to add to a chart. I really don't think it makes sense to try to force a trade. On the hourly time period, we may get a breakdown below this 10,471 area. And so if you want to draw a line underneath there, I will say those two wicks that pierce that line are a bit of a concern. But we do have a lot of basing back here in the past. We did pierce below here, and now we've just kind of chopped above. So if you really wanted to try a little bit of a breakdown, you could try that area there for a breakdown. Remember that any breakdown in the NASDAQ is going to be a little bit more suspect, just simply the fact of the strength of the market in general. Moving over to the Russell, so looking here at the rut. So in the rut, we are also coming down a little bit on the hourly chart. We're up about 0.5% this morning. Our strong demand area here is at the origin of this speed candle, this 1440 region, 1440 by 1436, where we could see a little bit of a pullback into that zone. 1486 for a potential breakout, so we'll look up there inside that area. I think all of those breakouts above us are pretty good opportunities. So what I'm going to do today, and this is, on a Friday, this is actually something that I highly recommend people do. I'm going to right-click on here, and I'm going to create an alert. And I'm going to create an alert when price gets at or above this level. It's going to send a text message to my phone. And so I'll get a text message when price comes to near one of my levels. And the reason that that's important is because it allows me, if you guys don't use this, I would highly think that it makes sense to use these alerts. It allows you to go and live your life, because one of the things that I see a lot of traders struggle with is that they do the set it and forget it style. Well, the problem when you do the set it and forget it style is that if you do it just a pure set it and forget it style, and price comes to your area for a breakout without basing, it's going to get you into the wrong trade. Or if price comes into your area and you get basing before the level on a reversal, that's what we call the kiss of death. And so I don't want either one of those. So I would much rather get an alert sent to my phone, and then I can open up my phone and look at my browser, look at my trading account on my phone, and I can still set the trade right from my mobile device, because I've done all the analysis up front. So don't feel like you have to be tied to the computer because you don't do set it and forget it orders. Utilize alerts. So that's my public safety announcement for today, is to utilize alerts. The more you know. It's like the old G.I. Joe, and knowing is half the battle. All right, so moving over, crude oil and gold, looking at our commodity markets. So if I take a look at crude oil, we have a little bit of basing right in here. Sideways, very sideways. We had this area here on the 4-hour that I'm still overall net bullish on gold, or on crude oil, if we get the basing properly above that 4150 area. And the trade that I'm looking at in there is the October 41 by 46 bull call spread, primarily trading the options position on here because it's a longer term trade. If we don't get that basing breakout, then no reason to get into that position. And even if you do get in, you've got a lower risk. If I'm looking for an intraday trading opportunity, I slide to the 1-hour chart. We had a gap up yesterday after the cash session closed, before Globex opened up. A little bit of a gap up. Prices are pulling down a little bit, but not a real strong demand area to lean on. If you really want to trade something and you're just dying to trade crude oil today, I would say that on the 15-minute chart, you've got a decent little level right here at the London Open. Remember, London Open, pretty strong time of the day, good area to look for potential opportunities. That's done on a 15-minute chart, so I need to change that to a purple color. All right, next, gold. So looking here at gold, we did have a gold breakdown yesterday. Unfortunately, as we talked about, gold came screaming down through the level. I did not get the prerequisite basing required for me to get an entry into this position. Yes, we got a decent move away, but because it didn't follow my exact entry criteria rules, I did not get this entry. If you took that entry, okay, great, no problem, but you then would have had to have your stop way up here. And so in that case, you probably got about a 1-to-1 reward to risk move, and now you're feeling some heat. Now, I still think that this still may go down from this region, but we may now get a retest onto this wick over wick area. Matter of fact, that's kind of where we are at this moment. So keep an eye on a potential for price to reverse off of this level. If I go to a 15-minute chart, where that wick over wick area is really this high upper wick right there, which tells me that there was a lot of selling pressure built into here. If you want more of a confirmation style entry on this on that hourly wick over wick, wait till price gets below this 1805 on there, and then just make your stop above 1807. So you've got a very small amount of risk in that style of a trade. Just get short. It's really more of a candle to candle style trade where you're just getting short below the prior candle's low. Now, if we get above this area before coming into that 1805, then that trade is going to be canceled. But I think that's a good way to take advantage of the potential move down without having to take the exposure of getting in too early. All right, moving over to our bonds and currency markets. Bonds and currency markets, when we take a look at these, starting with the ZN, which is our 10-year note. If I go to my 4-hour chart on my 10-year, you will see that we are very entrenched in a sideways price action. Nothing happening. This is a good market to not trade. And I had on Wednesday somebody asked me, Chuck, why don't we do iron condors on this? And the fact of the matter is there's just no true premium being given to these to make an iron condor make sense. In the Aussie, same thing that we talked about in gold, in that we had a breakout. However, the breakout didn't give me the prerequisite basing necessary for an entry. And so going to my 4-hour chart, the same thing that we talked about yesterday, and we spoke about this in the live trade room for those of you that were with us. If we look at the 4-hour chart, what is the Aussie telling me? The Aussie's telling me, leave me alone. I don't want to play. I'm not interested. I want to be alone and just don't mess with me. So I'm not going to mess with it. I'm going to leave it alone, and I'm not going to force a trade when a trade isn't really there. I still have a breakdown candidate this area here. Our 4-hour trend has definitely gotten a slowing of momentum, right? We can see a slowing of momentum here where we had a nice move up, and then we stopped and went sideways, and now we've kind of pulled back a bit. I still think overall I'm a bit more net bullish than I am bearish. And so, and primarily the reason I'm net bullish is just because of the fact of the US dollar, right? If we look at what the US dollar is doing, the US dollar is continuing to come down. We did get a pretty nice move up yesterday in the dollar, but the dollar is coming up to some decent 4-hour supply. This was that little gap fill area, but the dollar's coming up to decent 4-hour supply right in here that I think is worth paying attention to. See that clear on, I think even clear on the 1-hour. Right there, which had the gap fill. And so if price comes back into there, that's the origin of a very strong move down where sellers exceeded the buyers. Price comes into here, I think we can see a reversal. So we may see some of those currencies drop down a little bit today as the dollar has some strength. But then as the dollar starts to show more weakness, which on our big picture, the dollar is clearly showing a lot of weakness, we'll see those currencies have some strength. So speaking of which, on the euro, same picture on the euro. Unfortunately, didn't get our prerequisite necessary basing, and then it reversed. And when you don't get the prerequisite basing, you're oftentimes going to get those reversals, and sometimes people call those a false breakout. I just don't call it a breakout. On the 1-hour time period, actually if I go to a 15 minute, let's go to something a bit smaller. On the smaller time period, we have a little level right in here, right there at the 5 a.m. kind of morning. Better levels are down here. That long wick is a retest of this area here, which kind of invalidates that zone. So I'd have to go a bit smaller. There's a tiny little wick over wick here, which has almost been touched. So I think it just makes more sense if you wanted to try this one to look to this area right in here. And that's the wrong drawing tool. All right, so there we go. So that's that would be 1.14286, 1.14237. Now, once again, that's on a 15-minute chart. Everything on a 15-minute chart is more suspect when you're in a sideways trending market. And the reason that it's more suspect than a sideways trending market is just simply due to the fact that you have the ability for price to slice right through those 15-minute levels. Canadian dollar, this is what we call the kiss of death. We are basing before a level. We call that the kiss of death, is when we get basing in front of a level, and that's what we're getting here. It's not completely the kiss of death, because as long as I get a 2-to-1, the ability for a 2-to-1 risk on the reward to risk ratio. So if we were to come down into here from where we are right now, then this trade would still make sense. If we do any more basing inside of this 736 area, 0.736 region, then I definitely would cancel this order because basing, once again, kiss of death before level. But our 4-hour is telling us what most of our currencies are telling us, not a whole lot going on. Next, Great British Pound. So in the Great British Pound, we did have a confirmation short setup. Price actually blew right through that level without giving us the entry. And that's, the markets aren't telling us to go short on these currencies. They're actually all telling us the same picture. Leave me alone. And so we're going to. And then the Japanese yen, we did have a support line here. Price hit this support area and bounced up really well. So a potential breakdown still exists in this yen area. So that's all I have for today. Today's a great day to spend time with family and work on your hobbies or do what you love, and don't force trades. Traders Army members, I know a lot of you guys have been excited that we've been sharing our charts with you, so I will post all of these charts in the trade feed. These charts every day. I'll keep posting them in the trade feed so that you have access to them. If you have any questions, as always, send us an email, support@tradersarmy.com. I appreciate all you guys being here with us this week, and for you Traders Army members, I'll see you Sunday night in our live trade room. Everybody else, I'll catch you Monday morning. Have a great day. See ya.